Good morning, everyone. This is the weekend update of what was essentially the weakest opening week we've seen in Dow history, going back to 1897. And of course, the culprit, yet again, China, just like it was back in August. We had that big sell-off on Wednesday. We expected a big sell-off on Thursday, but instead of devaluing their currency, the Chinese raised it a little, which caused a little bit of a gap open on Friday and then an implosion into the close going into Friday's session. Not really a surprise given anything can happen in China over the weekend, and that's what the market is worried about. If you look back at what happened in August when China roiled the markets, we fell from about 17,600 all the way down over the course of 4 or 5 days to 15,370, essentially a 2,300 point pop. And funny enough, the Chinese sell-off again started about the same area. We're still about 1,000 points above where we bottomed out that time. And what are we going to use for a bounce back? I mean, it's all going to depend on what happens in China on Sunday night and in the other Asian economies. But, you know, what I'd love to see is a gap down on Monday, but every time we want to see that happen, they end up gapping the market up, and you have to sit on your thumbs. So let's see what happens this week. Look at a couple of indicators we haven't looked at in a while. The McClellan oscillator. This is something we only usually pull out whenever there's big sell-offs in the market to give us an idea of where we're looking at a potential bottom. 60, negative 60, we actually ended at negative 66 on Friday. Usually we see moderate bounces at times when we get around negative 40 or under, so we're definitely in the area where we could see a bounce. Now, the extreme sell-off levels, what we saw back at the Chinese low was negative 104, so we're still a little bit away from that level. And, you know, if we get down to this 80, 90, negative 100 area, that is definitely going to be a sign that we're going to see a near-term snapback in the market. And, you know, it's going to happen. What's the excuse going to be? You know, we'll see if it comes early this week or if we see some more bleeding on Monday and Tuesday. Margin calls, a little bit more panic, and then possibly a midweek bounce for a few days where it seems like everything's back and kosher. Now, I'm going to go back to a chart we've been looking at repeatedly over the last year. Like I've said many, many times, as the Dow transports go, so does the market. And since we topped out last February, the transports have just been in a slow bleed downward. The overall market has kind of been held up by the 5 or 6 stocks that prop up the Dow on a daily basis, but the transports have just been plain ugly. We broke another downtrend line in December, and we've continued sharply lower off of that level. I mean, the next real support level is about 600 to 700 points lower, another 10% lower, which is bear market territory. And we really don't want to see that happen, but that's what we're looking at. Dow 15-minute chart, you can see this bullish falling wedge in place. What is a level to look at for a possible snapback move? Right now, the 50 days around, let's say 16,600 could mark a beginning of a 500 to 700 point bounce back that we could see in the Dow, right back up to this 200-day moving average. And your question is going to be, well, how are we going to play such a move? And, you know, there's 2 stocks really to look at. The first one, Netflix, big-time mover, had that huge move on their expansion earlier in the week and was actually pretty strong on Thursday, kind of gave it up with the market on Friday. But once we get some stabilization in the market, this one's going to push back up. Earnings on January 19th. This is definitely a stock to look at. Good way to play this one. Late January, 125 calls around $3 are what I'm eyeing. The other one, of course, is Apple, which has been down 20% over the last month. 20-day exponential is at 106 here. It actually held up pretty well on Friday, and a push back over 100 could give a quick 5, 6, 7% upside move on this one. I'm really oversold on RSI. So these are the 2 large cappy stocks I would be looking for once we get that initial rebound in the market. As for the small caps, this is typically their strongest time of the year. But when you've got the market imploding, it's kind of a risk-off environment, which really sucks because this is small cap time of the year. But it's really hard to play them when everything is imploding and you're forced to kind of sit high on cash. But we have been seeing pockets of strength and stocks moving on lowish volume. You know, the volume's just not there yet. But once we get some stabilization, and once we see a couple of these small cap stocks really blow up, and I'm not talking this low float garbage that continues to move on a daily basis. I'm talking normal float small cap stocks that move on news or on chart breaks, etc. Once we start seeing a couple of those go, the momentum will build and we'll start to see lots of action. I mean, it's crazy to see some of the prices we're seeing on some of these stocks right now, but there's a lot of fear out there. And, you know, we're just going to continue to sit on cash. Hopefully we get a nice sell-off on Monday, Tuesday, and then some stabilization, and we get a few days rally, first with the large caps, and then that should trickle into the small cap stocks. So that's it for the video, guys. We're mostly in a holding pattern right now, sitting on high cash, stops in place. If your stops hit on a play, they hit. You can always rebuy a stock, but in environments like this, cash is king. And, you know, just go to the education site. I think it's on page 2. Worth going over the Trading Uncertain Markets video that I did a couple of years ago, just for a refresher, and especially for new guys, just to see how the best way to play markets like this. So have a great weekend, guys, and see you all in the chat room on Monday. Bye.